Whoa! What a start! Good evening, everybody. Yes, so the topic of today, as you will see it on the title, is margin of safety. Okay, um, and as you know, I represent margin of safety with a bar. And in the future, this is gonna look edited, and we're gonna make something dynamic that moves. Excuse me if my videos, despite of being extremely valuable, okay, my videos need improvement because basically all of this is just like a beta. It's something I want to remake in the future. Yes, I'm creating homework for myself. And yeah, I'm gonna do it better dressed, better looking, and all of that. And even paying models and sexy people that you enjoy much more watching, right? So, but out of that, my videos are extremely valuable. And I say this so you pay attention to this. And the subject today is this famous word, margin of safety. You know, uh, Zeus was the god of gods, and Athena was the god of war and wisdom and all of that. The god of investing isn't Warren Buffett, but his master. Benjamin Graham, he created a lot of focus around many words like value investing, like margin of safety. He started the movement here in New York, which is called the CFA Institute, which is a very social, how to say it's supposed to be a school where people go and get some certifications, very important ones, but also it's like a social hub where a lot of people meet and interact with each other, people that feel passionate about finance, right? And one of the words Benjamin Graham, Professor Benjamin Graham, writer Benjamin Graham, investor Benjamin Graham, because he had his investment fund from where Warren Buffett spinned out, was a spin-off of that. He created this word, margin of safety. And what I wanted to say today, because I already spoke a lot about margin of safety, is the simple thing of when it goes up and when it goes down. Most people, when they are investing, they are simply stupid by nature, okay? They don't even have in consideration this ratio, this bar that goes up and down. And to start my explanation, my explication, I will explain you why most people decrease their margin of safety, okay? And one of the reasons is that out there in the world, you have more investments than the ones you could process in your brain. If not even institutions and professional investors and companies made by institutional investors cannot process all the investments available, okay? Imagine if you will be capable, you, a normal person, a regular person, working by yourself without secretaries, without everything, imagine if you will be capable of processing all of that. The answer is no, okay? So, because there's so many investments in the world, the best we can do is create tiers where we put these investments, right? Yes, we could say bonds, for example, is high margin of safety, okay? If you show me a portfolio of a person that has 10 million invested and 30% is bonds, I will tell you that probably you will never get rid of that person without stealing from him, because those bonds are going to consistently pay him a 5% a year on top of 3 million, which is 30% of the portfolio, which is going to be 150K a year, right? And then if the stocks do well, imagine that, right? So yes, bond, we could say that's margin of safety, high margin, but I'm going to put it in a low tier because the return is low. So it deserves to be ignored, right? So we have many tiers, and sorry for putting bonds down here, okay? And then we have crypto, okay? which I hate to put it at a higher level than bonds. You have many investments. You have I don't know, good quality real estate, and then here we can put lower tier real estate, right? It's more speculative, higher return, but real estate deals where you can buy cheap, but it's hard to keep the occupancy high and things like that. You have many tiers, and then you have mid quality stocks, and then on top, as Benjamin Graham liked to say, I like the same. I put undervalued stocks. Okay, you have different levels, and this is a simplification. Okay, but within each tier, you have many types of investments. There's so many investments out there. You can do investments in commerce, investments in going to college. You have so many investments in the world. Okay, it's impossible to have everything in consideration. So you have different tiers, and the thing is that people don't like to feel that they are left out of something. So in order for them to get themselves into crypto, this is their margin of safety, right? Sorry, I want to make a dynamic bar in the future. This is a drawing. This bar goes down so they can get into crypto, get into real estate, because they don't want to stay out of that. So the solution they find, and they do it without even realizing it, is that they make their margin of safety go low. And the majority of the world lives in this stupid state of a low margin of safety. And when their children want to speak about money with them, they will tell to their children, no, investing is risky, be careful. Congratulations, you made your children poor for another generation, 2 or 3 generations, right? So this is the majority of people. To don't get excluded out of something, they make their margin go down so they can get themselves into this. However, if you want to make your margin of safety go up, you have to do what I do in my fund and what we do in my fund, with me and my investors, okay? Which is all of this, we forget about it. Yes, we have a little bit of US securities and in the balances we hold, or when we are waiting for buying a new opportunity, which might go down in price, and we might be able to get it even more undervalued. But what we do is that we start ignoring this. Why? Because we focus on this. We spend our time or research time in undervalued stocks, perhaps in the future in very cheap private businesses, doing a little bit of private equity, very good deals, buying on pennies on the dollar. We focus on that, but we ignore all of this. We ignore blue chip stocks with a P of 10, 15. We ignore that, right? So then our margin of safety goes up. And that's how it works. Margin of safety is all the time changing. And if you want to focus in all of this, you're going to make your margin of safety go down. So the best advice I can give you is that you create separated accounts. And if you want to get into one of these lower tiers investments, you create a separated account where your mentality is completely different. Okay? And you invest in real estate, you invest in speculations, you invest in cryptos in that separated account, but it's completely separated of who you are. And it's like you make a separate company with a separate mission and a separate philosophy. So if that account goes bust, it doesn't matter, because you as a person, as an individual, you didn't go bust. It was that small account on the side. And then you give an opportunity for that account to grow. And if it grows, marvelous. You were wrong, that account was right, amazing, right? That's a good approach, so you can keep your margin of safety high. Because the world is all the time trying to convert you. It's like a religion. They're trying to convert you. They want you to be included in crypto and these other investments, in these real estate deals. They want to convert you into that. And for that, they have to change who you are, right? And they try to do all that and brainwash you, right? And then what happens when they brainwash you? Your margin of safety goes down. And some religions, they succeed because they are very beautiful people. They are nice people. So when they are with a low margin of safety, what happens? The only investment they can do, go ahead and work, do something, a 9 to 5 that could pay the bills, because you don't have financial freedom, right? So if you want to avoid get into that game, into that, I won't say poverty, because I have admiration for hardworking people that keep this world together and working. But if you want to increase your margin of safety, you have to learn how to ignore that and focus on undervalued stocks, right? If you go to my website, even Warren Buffett says this to people. I never met an individual that focused in value investing in the right way in undervalued stocks. He didn't do well with his portfolio, right? So you have to understand that as an individual, it's very wise to just focus on this and ignore this. And then in the future, perhaps you have a company and you have your 150K a year analyst working in this side of your company, and then you have your 60K a year analysts working in stupid investment ideas, and you throw at those analysts the ideas in real estate and crypto, and you see if them wasting their time in those ideas, they come up with a decent idea. However, even if an analyst comes with a stupid idea saying me, look, you can do a 30% a year return in this crypto, and I'm, wow, amazing, wow, crypto is working, some idiots in crypto are gonna make money. I'm so happy, right? I already did my research, and I found this business in undervalued stocks that can do 60, 65, or 72.3. That was my last year returns. And then these ideas, I can leverage them. Okay? If I leverage 2x a crypto and the crypto is volatile and goes down 50%, I lost all my money. However, in undervalued stocks, I have many businesses where I can throw leverage at them, and there's no problem. So I have this return of last year, but then I can multiply it by 2. And this is my final return. If I don't keep the stock, because I already bought a lot of a great business and the business is doing great. So I'm gonna want to keep it, right? But someone in these cheap analysts can come with a great idea in crypto, or even say me it's 90% return. But I'm gonna be ready and say to them, look, sorry, but I already have a great idea on this sector, And that's why my margin of safety is so high, because my mentality is like playing against these people, and I never get myself into a speculative bet, which is based in pumping and dumping something like it's crypto, Crypto could be good, but you need, how they say it, to adopt the crypto, you need people using it. And it's very competitive environment, because what happens if they start using other crypto that isn't yours? Do your own research, find out how many cryptos you can find out there. There's even some that you can mine almost for free, okay? And what happens if they change the method of payment? If they start using other crypto, Bitcoin is so successful nowadays because they have logistics. They already have put in place many ATMs. So this is why many people in very poor countries where they don't trust in banking, or where banking is more difficult for them, go ahead and open a bank. Here in the US it's so easy, but in other countries it's hard. They use crypto. They use BTC, Bitcoin, because they have ATMs everywhere. But what happens when those ATMs sell services to other cryptos, okay, or other cryptos do what BTC did and stole money from a lot of people to reinvest it in these ATMs, and then you have competitors, right, in the banking space of Bitcoin, right? I don't want to insult Bitcoin because it was like a charity in some way. They stole money from people and they put these uh, ATMs everywhere, and now people in very poor countries who weren't able to do international transactions and payments, they are able to do it, right? Paying some enormous fees. But uh, this is why crypto is working, but it's a speculation because they don't have balance sheet, you know. Uh, so this is why undervalued stocks, where you own a piece of the business. And I was seeing a movie the other day. This movie Wall Street. What's the name? Gordon Gekko. I think it's not Gordon, but Mr. Gekko in this movie Wall Street with Charlie Sheen and all of these great actors. You know, Gordon Gekko was one of the Mr. Gekko was one of these people that bought companies, stocks, undervalued stocks, and sometimes he destroyed the business so he could squeeze out money quickly. What means that? The meaning of that is that you buy something that's very undervalued, and because it's so undervalued, it becomes your interest that the business closes. So they sell all their assets, all the buildings they used to produce something, and if you bought it at 50 cents on the dollar, you will double your money. Okay, because they have $2 billion in buildings, you bought the business at a 1 billion market cap. So when they sell out everything, you get more money very quickly. Instead of waiting 20 years for the business to produce dividends and pay you, you know. And the movie Wall Street was about that, and that character, right? That do those dirty deals with insider trading and so many things, so he could make quick money, right? But the essence is undervalued businesses. You know, you don't have to wait the monies to go. You don't have to wait for the companies to go broke. By buying undervalued businesses, what you start owning is the quick profit you do when the price corrects. You know, because the business don't want to stay in business, okay, and they work in your interest. You know, in few words, you grab your interests and you align them with other people's interests, and that's why you succeed. Instead of living in this situation when always your interests are against the interests of other people. You know, they're trying to push you to their side, you try to push them to your side, but you lose. Why not instead you align your interests and everything flows, right? And you will keep finding situations with conflict of interest. But what I'm trying to say is this idea of margin of safety today, okay? Sorry, I have too many ideas on my mind. I'm a writer, okay? So this thing is very important. And if you want to include other ideas, other investments, you know, and be nice with people and listen to their stupid ideas in crypto, you will have to make your margin of safety go down. And that's not good. And perhaps you will make a lot of money because they will get you into a crypto that's going to be the next Bitcoin. And it's going to scam everybody, right? But you don't need to scam anybody. You can buy very nice businesses that have a decent business where they help people. You buy them at a good price, as Benjamin Graham said, and you make your margin of safety go up. Okay? And that's it for today, in few words. A last announcement, as I always do, I'm gonna, let's recommend my book. I have it down here. I have a pile of books, a pile of books. So, you know, a little promotion to my last publication, as these videos, which I want to remake in the future, this is a book, it's a manuscript. You know, this has to be sent to an editorial, and if they like the structure, they're gonna rewrite it in a better way, which you can process. You know, because perhaps you, the viewer, you're used to a specific way of writing, and so you're, I won't say stupid, but you won't be able to benefit from this. I myself did over 360, 370 already because I keep editing, you know, editions. So I think it's very clean. If you buy this product, this book could be worth $1 million for you, because you're gonna understand it after so many editions, you know, and it has numbers, you know, everybody understand numbers. Okay, so this book is excellent, and it's not about investing. It's about a specific approach to investing. As I told you, you have many different ways of investing. There's more than this. Okay, this is a simplification. This helps your mind to focus where it must be focused. Okay, which is undervalued stocks, value investing, very quality business, but that right now they have a discount. Sometimes that happens too. Okay, so yeah, that's it for today, and thank you for watching, and I wish you all the best. Okay, goodbye.